Good morning, everyone. Welcome to Apple Markets. Sorry for that small delay there. We're going to start right now with the strategy webinar looking at price action, of course, on the Forex commodity stock indices markets. First of all, though, be aware, though, that this webinar is shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange or global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, so typically what I'm looking at is trend and momentum, patterns, support and resistance, piecing that together to understand if I like the particular instrument, financial instrument, or not. If I do, I look at where I think the decision zones are, and I then make a trading plan, what I'm looking for to trade it, what kind of triggers, is there a good reward to risk available. All right, so that is the main the focus. Before diving into strategy and looking at patterns today, be aware that there is some Euro news here. We got the ECB monetary policy meeting, some pound news as well. So those are good things to keep an eye on. You can find that on the Admiral Markets website. And you can increase the filter by clicking on these dates here. And it should be able to see more days. There you go. But I also actually wanted to take a quick look at yesterday. Does anyone see my chart or see my screen at the moment? Is it visible? It could be correct that maybe others seem to be seeing my chart or screen clearly. I don't know exactly what the reason could be for you. I don't know. Maybe try to reconnect or maybe try to rejoin. Not sure what the reason is. The others do see it. But strange. I don't know why that's happening with you. I would like to, I guess I cannot see yesterday's calendar somehow. Okay. Doesn't matter. But you get the point. Analytics, Forex calendar. So let's move on. And let's take a look at the charts. All right. Now, yesterday I started off with gold, and I was interested in trying to position here a trade because of the fact that price is in a fib bouncing spot. There's a 50 Fibonacci fib of this entire upside that happened right here. And there's a minus 272 target. This could easily be an ABC zigzag. And it looks like it's a bouncing spot here as well with support. So I still think that's possible. Now, so far, the price action is very, very modest. My time pattern rule says 5 to 6 candles not breaking a low indicates it's a swing high, swing low is over. So you can see here clearly this last push down on this daily chart, right? If you look at this daily time frame, we're looking at this now on the 4-hour chart, this last push down. So that last push down on the 4-hour chart, right, it had several bearish candles in a row. That's called momentum, as you probably know. And when does momentum start and when does momentum end? That's always a bit more difficult to assess. But when momentum ends, generally speaking, is, in my opinion, when 5 to 6 candles don't break a low. That moment happened yesterday with this candle. All right, so anyone looking for a reversal trade could have taken it in this zone, I think. At this moment, price is going a bit against us. Now, this candle is not closed yet, so we'll have to see. But there's a bit of retracement, and the upside has been very, very slow and modest. And this is, to be honest, now with this kind of slow response, starting to look more like a corrective pattern, like some I don't know, some wedge. This does not look really like a reversal as yet. So doesn't look too good, the odds of upside at the moment. I think this is looking more corrective. We see a clear impulse to the downside. This is looking choppy. So there could be a continued downside with this gold. In that case, there could be a fall down to 61.8 fib minus 61.8 target there. So they got that space as a bearish kind of potential. I'm more interested in the upside personally now. Because of the fact that if there is an ABC zigzag, like I said yesterday, there could be some space to the upside here, to 1500 for instance. Maybe higher, who knows, but step by step. So when looking at these candles, I mean, I would just trail it very tightly behind this fractal probably here, or even this candle. And reduce the risk just to a few pips in a way. No, not pips, but you get the point. Because keeping the stop loss below the bottom is quite, I think, I don't know, at this moment, maybe risky. I think it's better to reduce the risk to about a quarter of the original risk, in my opinion. Who knows? Maybe these bottoms, these lows can still stop price and be a support level, and the next time it turns, it could really show momentum, and it could break through this resistance. And once you see a strong 4-hour candle like that, then that could be definitely a good signal that price is turning and that the upside is still alive. At this moment, it looks questionable, but I think time factor is still on the side. This is candle number 9. Typically, breakout is better if it's 13 or higher. So I think time is still on our side, and I think that there's still a good chance that price might make a turn and now show a bit more momentum to the upside. All right. If not, it would have to break through this fractal with a candle like this, for instance. Upside is definitely over. Small loss. Those things happen a quarter of the original risk, plus minus. And those things happen with reversal trades. Now, yesterday, the dollar yen worked out fine. The euro dollar did not make the bullish bounce that I expected. So a mixed day from that point of view. The euro dollar didn't make the bounce that didn't make the continuation I was expecting. I wasn't really hesitant with 2 hourly candles like this, especially the third one. You see, when you have, from my point of view, when I count candles, 5 to 6 candles not breaking a lower high is my time pattern rule for a good chance that a swing high, swing low is completed. The first moment, though, that I'm a bit concerned about a potential, that momentum might not continue is when 2 candles in a row are pointing to the opposite side. Doesn't always have to be that way, because look here, here we had 2 candles to the downside, but then a bullish candle. 2 candles to the downside, but a bullish candle. So if I see 2 candles to the opposite direction that I'm expecting, but I see then another candle, the third one or maybe fourth one, that is bullish, preferably a bit of a better bullish. This is not that great of a bullish candle, to be honest, but okay. If it's the third candle, a bullish candle. If it's the fourth, it has to be stronger bullish. My point is that these 2 bearish candles is a first indication that the expected upside or the expected direction might not continue. So with these 3 candles, I was a bit worried that we might not get the bounce. Looking at the 5-minute chart, because that's the one I was looking at for the continuation here to the upside, it started off like a bull flag, actually, right here, and that was good. The oscillator went back to the 0 line as expected. It's just that we never got a break above these fractals really in fact, we got a break below support with quite a good momentum, and then we got a flag like this. So it was the opposite break, and then we still got the continuation later that day. So I don't think there was a sufficient signal, but if anyone, for instance, were looking for 5 to 6 candles not breaking this low, then it did happen here. The good thing is that depends how you manage risk. The stop loss was tight, but that depends how you use risk as well. So that could have been one way of tackling it right there. That would have been a loss in that case. From a 50-minute point of view, 1, 2, 3, 4, 5, 6, 7. I never saw confirmation really here. 5 minutes, one can see it. 15 not. And here too, we had a strong break of basically the bull flag or triangle. So that was already a warning sign that upside was not as likely anymore for intraday. That's always the risk. That's why I'm always careful with counter trend ideas, especially if the long term is down, weekly, daily, 4-hour, and we only have 15 and hourly up, because stuff like this could happen where you see a push up, but you don't have the follow through. If the trend would be up, there is a very substantial chance that you'll see that follow through with the green arrow. And you might see that, of course, counter trend too, but problem is with counter trend is that stuff like this can happen quicker as well. Regarding, so from an intraday perspective, personally, I think if I remember correctly, I was saying if there's any momentum to the downside, look for bear flag and break. So anyone looking for a short here would have done well and would have made sense. Now at this moment, it is surprisingly bearish. I was still looking for a bigger retracement, actually, although I wanted to see a break of resistance first, like this. That certainly is not happening. So that's a bit difficult when price is getting into a region where there's double divergence. It's still pushing. And that's good with position trades or swing trades, because sometimes if anyone is in a swing trade and you're basically moving the stop loss and letting it ride, and then things can push a lot further than sometimes we ever think. Sorry. That's one advantage of not having a TP but an open, or a TP that's pretty far away, and using a trail. That windfall could be sometimes substantial. Also because it's easy to miss a short in here with divergence, and I personally expected an ABC zigzag unless this bottom would get broken. So it looks like it just got broken. So that zigzag is not happening. The confirmation for me would be a break above that, but that's not happening too. I personally am not interested in shorting it here to the downside. But on a 5-minute chart, maybe small little continuation trade could be possible. Let's take a look. This is unusual fall for London Open here, or European Open, I should say. That is a massive move just before a London Open. Looks about 60 pips. That is very, very unusual. All right, that is very untypical to see such a big move. I'm not sure why. I have a hunch that it's some news event or something. I wonder what it is. It's not typical, let me say it this way. But with that said, if it does go back to the pivot point, for instance, Just thinking here if there could be any intraday trade down to this S1 and M1, 106.60, 106.50, 106.40. It's possible it can get there within today. I wouldn't want to short it now. Personally, I would like to see some pattern, probably up to the pivot point like this, maybe in head and shoulders here on the 5 like that. Then we'll get a break of the trend line, and there could be that one more push down. But I would need to see confirmation, because if I see 2 bullish candles as well, by the way, then I'm not that bearish anymore either. Same. I'm also cautious, because not to say that I not necessarily would not be looking for a short anymore, but it depends on the 5-minute structure too. But I'll definitely be extra cautious. And the reason is that I think that with double divergence, I just want to see a bigger retracement first. But, you know, I sometimes miss some moves because of that. If I'm looking for a retracement, it doesn't happen. So tough luck for me, but I personally am not that interested. Maybe an intraday trade. That's all I could be interested in right here. An intraday short. If I see a pattern, if I see a correction, if I see a head and shoulders and a time pattern here for one more downside. Yeah, okay, that makes sense. But a swing trade with double divergence, no. And could this be the lower low and price then reverts back into upside? Yes, equally possible. So that's why I'm careful with shorts. Shorts are possible in my view, but I definitely want to be careful that this is not the lower low and price starts to revert back up very strongly. Dollar yen, what's better? I was looking for a bullish candle. That occurred here. We had 2 bearish ones. Hour after our webinar, we had a bullish one. And also was looking for intraday 5-minute continuation. Intraday because I thought personally it's not a good swing spot. Price was up in here. I thought that this move was substantial. I saw some divergence between these tops. I did see one more push up on the dollar yen, but that would lead to double divergence, and I didn't think it was a good swing area, and better an intraday area. Now, in fact, price is still pushing in that direction, so swing would not have been that bad, but anyhow. So yesterday, the bullish candle arrived here, and then we got a 5-minute correction and a break of these fractals, break of the pivot point. Anyone looking for time factor could have been looking for a trade. I'm not sure about here. I don't know where the 1-hour candle is, but here you see 5 candles not breaking this low. That could have been one way of doing it. Now, still a bullish candle, in fact. So from my point of view, the 5-minute is bullish. You see it too. So there could be still one more dip and continue. Who knows? Now, there is a point maybe that this is going to stop, of course. The dollar yen has moved up far. So, you know, this could be the last higher high, and that's it. But there's also an option of just a continuation. So for the moment, if there is some dip retracement, that could easily be retracement for, it could definitely be just one more higher high coming up. For me to think about reversal trades, I would probably need to see a very strong 4-hour engulfing twin or very strong 4-hour bearish candlestick pattern, or 2 4-hour bearish candles in a row. Then I would say reversal is hanging in the air. Until that moment, look at these bullish candles, and the momentum is still pushing. That said, obviously prices push far and a lot of pips, and there is double divergence on the hourly chart. So would I be surprised that at any point this upside could stop? No. So that's kind of if you see my point, it's a bit of an annoying spot because of that. Because yes, it could push a bit more, but yes, at the same time, it's also a lot of things why it would be, this is it. That's all of the upside. So it's a bit of a diplomatic kind of hard spot and difficult spot, and needs to be solved a bit tactically by, I think, monitoring this hour chart and seeing if there's one more kind of intraday, excuse me, one more push on a 5-minute chart, kind of retracement of this candle and continuation. All right, the pound looks a bit more bullish because of this impulse. So we had, yesterday we didn't get the zigzag. Here, price showed a bearish candle during our session, and we did see some follow through on that to the downside. Then we got a reversal, 2 bullish candles, a momentum, and this looks corrective. So to me, the zigzag might still be occurring now. All right, anyone looking for a bounce at these fibs could use the candle pattern 2. And you see here, 5 to 6 candles not breaking this low. That could have been one way of tackling it. These candles are bullish, although marginally bullish. 1 hour, we see bullish candles. This was bearish, but it's only one candle. It looks like a pin bar, but it's a pin bar that doesn't really say much to me because it's really in the middle of nowhere. But it could indicate maybe some correction like this first before getting the upside. So let's see. Probably if it's the 61.8 fib could be strong if it gets that low. M2 61.8, 124.50 as well, 50 fib pivot point. But let's see how the news responds as well. So yeah, yesterday euro yen, forgot to mention, totally didn't look at the euro yen yesterday, but let's see. Here's an example. I personally was looking at a pattern, a ascending wedge pattern like this. And there were 5 to 6 candles not breaking this low right here. 1, 2, 3, 4, 5. So that was one of the reasons why I decided to take a long there. All right. So, it of course looks a bit strange right in front of that resistance perhaps, but I wanted to take it before the break. It was based on 2 patterns. The ascending wedge, well, the fact that price was above the moving average, and here everything was bullish, and 5 to 6 candles are breaking this low. So to me, you can see that you got a series of higher lows. So I thought the break was prominent, and that there could be basically some breakout to the upside. That happened indeed. That's just an example of how I use time patterns basically. So for me, looking at, just to wrap it up, maybe, I'm looking at, what I like to do is look at candles. Just look at the direction of the candle. Is it bullish? Is it bearish? Have 5 to 6 candles failed to set a low or high? Are there 2 candles in the opposite direction? If the candles are bullish, for instance, here on this time frame, right? Then it's like a green light to look at, a lower time frame to see if there's a retracement. So that can be done, in my opinion, on all time frames, like from weekly, looking at the weekly candle, to zooming into the 4-hour chart for a retracement, or using 4-hour candles and zooming in to the hour or 30-minute for retracements, or using hour candles and zooming to 5 or 15 for retracement. So it's an easy way of looking at trend and momentum, just looking at the candle itself, combining multiple patterns there together. Let me see if I can give you one example, then I'll dive into your question, Craig. Aussie, we talked about the Aussie too. Aussie was really very choppy. Didn't make a zigzag anywhere, as you can see. So anyhow, but to give you an example, all right. So let's take a look. Here you see a strong 4-hour engulfing twin, right? So from that moment, it can be bearish. So let's say on the 30-minute chart, for instance, just give an example. I'm bearish, so I'm looking for pullbacks. You see a nice pullback right here. So 5 to 6 candles not breaking the high, because once again, it's bearish. So it would be here. That could be a short, or let's see, here, right? Those are all kind of weaknesses after a high is, or after a top has been formed. So that's when 5 to 6 candles are not breaking the highs, right? Which is, of course, makes sense, because in this case, the 4-hour chart is bearish, right? Now, I don't use this, I want to be clear, I don't use this everywhere and anywhere. I would then have, I don't know, thousands of trades open at any time, I guess. It's not that widespread. When I use it is when I do my analysis, I find I find a particular instrument interesting or not. When I do, then I would look at decision zones, and when I find those decision zones, then I look for triggers. Triggers are candlestick patterns, time patterns for me, Fibonacci patterns. Like, this is just to illustrate what I mean with time patterns, so you have an idea. It's not to say that I use this particular method everywhere and anywhere. No, only after I've done an analysis and looked at decision zones and looked at reward to risk ratios, etc. So we can take a look at some other pairs like this Aussie, in fact. But first, let me look at Craig's question. Anything to do with these notes regarding euro dollar, options expiring? There's some reports saying that options have been expired or are expiring, and how does it affect the FX market? Well, it's basically if there are big players that want the price, I know there's an option that says they need price, they'll win the option if the price is above 110. So they might defend or try to defend a particular level by making transactions in particular currency pairs at particular times. How successful they are in that, I have no idea. But that's, I guess, how, I'm not 100% sure on this, but that's how I heard someone explain it to me, at least, about how, this could impact the price movement. But to be honest, I don't know exactly, the mechanisms of that. I think maybe with the minor cross that has more or less participation, it's easier. I don't think that with the euro dollar, it's difficult for me to imagine that that there will be major movements because of it. But maybe what could happen is if a number is floating around in the market, if a number, for instance, if traders are hear a number, for instance, like there's someone who has an option at this level, that they might also start thinking about this level and start trading because they don't want to go into that danger zone. They don't want to test that level because they could be maybe scared that there could be a reaction at it. So, how much rumors like that impact the market, also no idea, but that's another factor though. Personally, I don't listen to rumors or news like that myself. I chose on purpose to do that because for me it was just distracting, and I don't think it really gave me any value personally. So I rather look at a mixture of fundamentals for long term, medium term, and technicals for short and medium term. Yeah, very difficult. Everything is boils down to psychology in my view. So there are tons of factors that influence the human mind and our psychology of all the traders combined. I think that price action shows that psychology the best. So I think if just sticking, you see what I mean, right? Just sticking to what we see on the chart, that will give us the ultimate result of that psychology. Definitely the people who say that psychology is, or that the market is rational, yeah, that definitely don't agree with that. Obviously, it's not rational; it's very emotional, and the markets make huge overextensions and huge moves, basically not based on much, and that's all because it's all traders, it's all psychology. Even an algorithm has been made by a human. So unless a robot can make an algorithm, I think it's going to remain emotionally based um, for a while at least. And I don't see it as irrational at all. But that's the good thing because that means that we traders are able to capitalize on those emotions. When the market overreacts, that gives us the opportunity to make pips. And for those that believe in the efficient price theory, that price is always choosing the most efficient path. I definitely, obviously disagree too. Price is emotional. It doesn't choose the most efficient path. It is not moving randomly. There's a lot of imperfect information out of there, and above all, we make decisions emotionally. So that's why now that I talk about trading psychology regularly, because if we can't handle our emotions, then how are we supposed to let's say, beat or profit from the market emotions? Not going to happen. That's why we need to manage our emotions, not remove it. It's impossible to remove it, but manage them. Dollar yen, yeah, what that could be Trump indeed. It could be the Bank of Japan indeed. From my point of view, from a technical point of view at least, I was expecting upside. I've been saying that pretty long already now. Almost looked like I was crazy because I was saying it for weeks and weeks and weeks, and it was just going sideways. Finally, we do get the upside. 20 weeks, I was hanging in there with my opinion, or my view, my analysis, and now finally it's materializing. The reason for that is because of technicals also, because five wave up, strong momentum. This looks like a correction. 50 fib is always a very potential strong spot for a zigzag continuation. So technically, I thought it looked good. The yen is in a weak spot because of this five wave up. for whatever reasons. So that makes sense to me. Now, the reason why it's moving now, indeed, that could be, yeah, it could be numerous reasons. One of them, Bank of Japan and Trump, indeed. The dollar making strength gains with Trump recently, but I wouldn't be surprised, as it's just a very awkward situation here. No swing trades from my perspective, because indeed of the risk of a correction first. But then I would expect upside again. Euro pound made that upside, but after that, just retraced back to the bottom. This is candle number 16, so I'm a bit cautious with the upside now because it's really challenging this bottom. Bearish candles. Could be triple bottom, but probably what I would need to see is 5 to 6 candles not breaking this bottom on the hourly. Aussie, by the way, we forgot to finish the Aussie. Very sideways correction. Could be head and shoulders, but could be just a flat with a break lower. I'm open to both, but for a downside, I really need to see price hit S1 or M1, and then make a bear flag. For upside, I probably need to see a hook back here too on the hourly chart. 5, 6 candles not breaking this low. All right. Anything else? Let's see. All right. Pound odd, interesting enough, has momentum, has no divergence, and is showing a slow correction like this. I wouldn't expect me to say this, but 5 to 6 candles not breaking this low, and could be ready for one more push perhaps. That's a bit of a surprise. But the pound also looks strong. Pound dollar at the moment. I mean, relatively. Oh wow, oil went a bit further than I thought. It pushed higher. Double top at the moment, I think, and maybe finally that correction could start. And the zigzag that we talked about yesterday could take place. Looks like 61.8 fib is a nice one. Got a head and shoulders here. Inverted head and shoulders. Move back to that 61.8. Golden ratio, bounce, head and shoulders pattern, and a zigzag pattern to these targets. So that's a quick look, using patterns, looking at this market. But just to give you maybe a bit more idea, let's take a look at euro yen. And let's take a look at the 4-hour chart and I don't know. I will go back to random date. Let's see. Uh, March this year. All right, so March this year. All right, there we go. So let's mark the point. All right, light blue will be 2 candles. To the opposite direction, and light orange and dark blue and red will be 5 to 6 candles not breaking. Just on a small piece here. It's a bit complicated with all these horizontal lines. I'll just do a small piece. I don't want to hold you up too long here, but that could be quite complicated to do that with these horizontal lines. But okay, let me do it this way. All right, just a small piece here. Alrighty. So, don't get me wrong. This is just showing a very small piece, but it's just to illustrate what I mean. That's all. If we would dive into all the specifics for this whole part, it would take too long with time patterns. And I only use time patterns once again with confluence and after doing analysis. But just to give you an idea, so the orange part is where we had 2 bearish candles. So on a 15 or 30-minute chart, for instance, and that's what I would turn bearish. So here we have, for instance, 3, 4, 5, 1, 2, 3, 4, 5 candles not breaking this high. All right, so that's a moment where I would be, for instance, looking for shorts, or on the retracement. Sometimes if prices move very far away from the high, I would be looking for a small retracement. In this case, the high gets broken by just a bit, but I don't think typically the stop loss should be in danger. I would typically go a few pips above that, so that should be fine. And we get a downside. And then we have 5 to 6 candles not breaking this low, and that would be the moment to exit that trade. Then we get on a higher time frame, 5 to 6 candles not breaking the previous high. So maybe a 50-minute chart is a bit too low, but on a 30-minute chart, for instance, here, we would be seeing that this high has been made. 4 hours turned bearish. All right, so not sure if the stop loss survives in this case, but maybe, depends where I have the stop loss. This could be iffy, but I think yes, but depends. 5 to 6 candles would be somewhere in here. So eventually the downside does happen. If not this one, then on the next one, where you get a hook back here. That's also 5 to 6 candles not breaking this high. Once again, the trend is down. So depending on the situation, there could be more spots to do this, but I'm not saying that every spot is a good spot where 5 to 6 candles don't break these highs. All right, then we get a bigger upside. You got 2 bullish candles indicating maybe a turn of events. So from that point of view, 5 to 6 candles are breaking this bottom. Could be a reversal trade idea. Now in this case, this low gets, I think, just a bit broken. Otherwise, this would have been 1, 2, 3, 4, 5. The bounce would have been here. This one just posted a lower low. So from that point of view, the fifth candle is up in here. So, but even here, a long you see still working out pretty well as the yen pushes one more time. Then we get 2 candles to the downside. So again, bearish. 5 to 6 candles. Not breaking this high would be 1, 2, 3, 4, 5, 6 is here. That was before the turn. And the next one is 1, 2, 3, 4, 5, 6. That's here. So as you can see, in this case, price is really pushing against the Keltner. In this case, I would really want to see it below the Keltner, personally, as a breakout, or a retracement, so that it retraces part of this before looking for short. Eventually breaks through the Keltner. That's a different type of trade. It's a breakout trade, though. But that sometimes happens. If 5 to 6 candles, if I'm waiting for 5 to 6 candles, sometimes it pushes further away rather than retracing. That can happen. Here too, for instance, 1, 2, 3, 4, 5, fifth candle here, bearish. But we don't get the retracement. Maybe just a bit. Let's see. 38.2 fib. Oh. And here we get again a bullish. 2 candles bullish, and 5 to 6 candles would be all the way up in here. So sometimes, don't get me wrong, sometimes waiting that long has disadvantages. That price has moved already quite substantially. So it's not the only factor I use, therefore, but it's one of them. 5 to 6 candles here, 1, 2, 3, 4, 5, somewhere in here, and price still pushes forward. Basically, you'll see it push less further, you'll see it push away less when basically, for instance, combining a daily with an hourly chart, or a 4-hour and 15 perhaps, because the higher the time frame, let's say if I'm using a daily and 4-hour, then 5 to 6 candles on the 4-hour chart is quite a long wait. All right, but just wanted to give you one more example, a few more examples of what I call, let's say, time patterns, just the start of swings and end of swings. But that gives me very good info about assessing when is a good moment to understand when the swings are finished within the trend and stuff like that. All right, so I don't have much to add at this moment. Do you have any questions at this point? Dollar CAD, by the way, made a retracement here, but could be at a bouncing spot. 1, 2, 3, 4, fifth candle right here. Still below the pivot point, but for instance, we can see that on these time frames that I just discussed, that it could be a bouncing spot here, looking at the hourly. So on a 5-minute chart, for instance, if it makes a bit of a pullback here and a bounce, that could be interesting. Otherwise, nothing comes to mind at the moment. Your dollar, by the way, is bouncing as expected. So let's see how it bounces. If it's still worth shorting, or if this is the lower low, and that's it for the euro dollar. Let's see. Pound, not able to break the pivot point at the moment. Let's see how that responds. If it's able to push above 125, still a round level out there, right? And breaks some kind of bull flag, it could be good for intraday push-up counter trend, I would say. And yeah, that's about it. If you have questions, let me know. In the meantime, let's take a look at these webinars. You got Heikinashi, now they're talking about Heikinashi with Ichimoku. That's tonight, 5:15. That is GMT time. And next week, we're back, of course, with the recap on Monday, Tuesday, Wednesday webinar, but also Thursday, we're going to take a look at learning how to identify key decision zones in the market structure. That's next week, Thursday. Euro pound. Euro pound, I was bullish, and indeed that happened. Price made it upside to the 23.6 fib. And I was still actually bullish because of one more continuation, zigzag continuation up to the 38 and 50 fib. I'm a bit cautious now with that idea because of the recent bearish candles that we've seen. I still think it's possible that price is making, let's say, a triple bottom. But for me to trade that triple bottom, I would need to see price make basically a push up here and and then maybe a dip like this, but 5 to 6 candles not breaking this low would be pleasant for me to think about that reversal trade. Or if price manages to break below this bottom like this, then I might zoom into lower time frames. I wouldn't do that with the euro pound anyhow. But if it were other currency, then I would look for intraday shorts here as a continuation. If there's a good hourly candle like this, then I'll look at 5-minute chart, look for a bit of a small pullback for a push lower. So from my perspective, I wouldn't do that with the euro pound once again. But let me say it this way, because it would show divergence, I would be looking for small trades in here. Lower time frame trades, kind of. Whereas if it bounces, I would be looking at higher time frames because I want to see a bit more information before there's, let's say, more chance or more likelihood of that bounce, of that reversal. And you can see the minus 272 target lighting up with the moving average and the bottom. And 84, this 84.40 could be a bouncing spot too. You got 85 as well, by the way, to deal with, which is a psychological round level. Alrighty, folks. Well, thanks so much for being here. Wish you great trading. Looking forward to see you in the upcoming webinars. Take a look at our markets as well, because there are a lot of good things here. You got the Zero to Hero course still available, if I believe, on the main website. You can check out WebTrader, which allows you to draw waves easier. MetaTrader for Supreme Edition with 100 plus extra features and a lot of analytics as well that Nenet and I partly deliver. So hope to see you in one of these parts as well. And see you soon, folks. Cheers.